Imagine a single company going public that is so monumentally massive, its launch alone could cover 8% of the entire United States national debt gap in a single day.
I mean, it sounds like science fiction, right? But it's happening.
It really is. Hello, and welcome to NovaStream. We are streaming 2004/7, and, if you look at the dynamic displays framing our broadcast right now,
Yeah.
it is just a relentless wall of data.
Yeah, it's a lot.
We've got the live crypto markets tracking BTC, ETH, and SOL with these real-time sparkline charts. The global financial indices are flashing the S&P 500. The Forex pairs are moving incredibly fast. And right down the side is our breaking news feed, just auto-curating headlines the second they drop.
It is a constant, mesmerizing river of information. But standing in front of a fire hose of raw data without a filter is incredibly overwhelming for anyone.
Which is exactly why you are here with us. We took the specific stack of sources, articles, and research notes you provided, and our mission is to basically extract the signal from that noise.
Right.
We are here to bring you the highlights of the day, and the journey we have ahead is wild.
Oh, absolutely.
We are tracking a major tech giant facing a totally unexpected cash crunch, a space IPO poised to act as a literal financial black hole, a revealing look inside a 2025 White House crisis meeting, and a massive downgrade for the world's biggest sports brand on the absolute eve of the World Cup.
It's a packed board today.
It is. So let's jump right into the tech sector because there's a flashing red ticker item that demands some attention. Supermicro just plunged 9% in after-hours trading.
Yeah, and the underlying mechanics of that drop are fascinating when you look at the contradiction in their earnings report. I mean, the company just announced a massive $39 billion backlog in AI server orders from just the past few weeks.
Wait, $39 billion in orders, yet they are simultaneously issuing a $7 billion equity and equity-linked financing package.
Right, it makes no sense on the surface.
Let's define that for a second for the audience. An equity-linked financing package means they are essentially issuing new shares and convertible debt. So they are actively diluting the value of the company for current shareholders just to get their hands on immediate cash.
Yeah, which is brutal for the stock price.
This is like a highly rated restaurant having a line around the block, but having to take out a massive mortgage just to buy enough ingredients to open the kitchen for tonight's dinner service.
That is a spot-on analogy. It really captures the reality of the hardware market perfectly right now. For the last year, the dominant narrative has been, that AI is an absolute gold mine.
What, the new gold rush?
Yeah. But what Supermicro is exposing is the intense cash burn required to actually build the physical infrastructure of that boom.
It's not cheap.
Not at all. To satisfy those advanced AI orders, the upfront component costs are staggering. You have to procure thousands of highly specialized chips, implement cutting-edge liquid cooling systems, build massive power supplies.
And all of that capital goes out the door before the company ever sees a single dime of revenue from the client.
Exactly. It shifts the narrative from AI being a gold mine to AI being incredibly expensive just to participate in.
Okay, I understand the hardware side, burning through cash to build the physical servers, but the software side is supposed to be the high-margin promised land. Once a model is built, it just scales, right?
We would think so.
Yet, looking over at Japan's market and our sources, there is massive anxiety on the software side, too. SoftBank has had a brutal week. Their shares are down over 20% in just 5 days.
Yeah, and they actually just lost the title of Japan's most valuable stock.
Oh, wow. So
Yeah.
why is a software-heavy investor like SoftBank suddenly plummeting like that?
The pressure on SoftBank really comes down to the mechanics of corporate debt. They are having severe difficulties raising a new loan right now.
Why is that?
Because the creditors on the other side of the table are looking very closely at SoftBank's massive funding commitments to OpenAI. According to the internal reports circulating in the sources you provided, OpenAI is failing to hit some very ambitious internal growth targets.
Ah. So the creditors are looking at SoftBank and seeing a company that is legally committed to pouring billions into an AI software giant that might be stalling out.
That's the thing. They see a cash furnace without a guaranteed return.
Right.
It forces a complete reassessment of risk. I mean, if the hardware is too expensive to build and the software growth is stuttering, the entire AI-related tech sector starts to look incredibly precarious to institutional lenders.
Well, if capital is suddenly growing cautious about artificial intelligence, that money have to find a new home.
It definitely does.
And looking at our financial feeds, it seems like that capital is blasting straight into orbit.
Hmm.
We need to break down this upcoming SpaceX IPO
Yeah.
because the numbers here feel almost fictional.
The scale is entirely unprecedented for modern markets. I mean, SpaceX is offering 555.6 million shares at $135 each.
Wow.
Yeah. The explicit goal is to raise $75 billion at a $1.8 trillion valuation.
Just wrapping your head around a $1.8 trillion entry point is difficult.
Mm.
But your notes highlight that the real story isn't just the size of the company.
No, it's not.
It's the intense gravitational pull it is going to exert on the rest of the global market.
Yeah, there is this back-of-the-envelope calculation from Commerzbank strategists that illustrates this gravity beautifully. They estimate that about $15 billion in foreign capital, heavily concentrated from European investors, is going to flood into the U.S. markets on day one of this IPO.
Day one. That's massive.
It is. And to understand the sheer weight of that number, consider the U.S. quarterly current account deficit.
Let me pause to clarify that term for anyone listening. The current account deficit is essentially the broadest measure of the country's balance of trade. So it's the gap between the value of what the U.S. imports and what it exports, plus international transfers.
Right.
The U.S. usually runs a pretty massive deficit here.
Yeah, currently that deficit sits at roughly $190.7 billion. So mathematically, the foreign capital rushing in just to buy SpaceX stock on day one covers about 8% of the entire national gap in one single day.
I have to push back on the mechanics of this, though.
Okay, sure.
How does one single company going public force international index funds to aggressively buy its stock like that? That sounds almost like artificial market manipulation.
It sounds like manipulation, but it is actually just rigid financial mechanics.
How so?
The regulatory index rules have been specifically relaxed to fast-track SpaceX into the NASDAQ 100 shortly after it launches.
Oh, I see.
Think of an index fund like a fantasy football team with a strict salary cap. The fund is legally required to perfectly match the composition of the NASDAQ 100.
Right.
If an incredibly massive, highly valued star player like SpaceX is suddenly added to the roster, the fund hits its salary cap.
So they have to make cuts.
Precisely. To make room, the fund managers are forced to hastily rebalance their portfolios. They literally have to sell off shares of other solid, performing companies just to free up the cash to buy SpaceX.
So the IPO literally becomes a financial black hole, sucking in capital from the rest of the market.
They have no choice but to buy it.
So foreign capital is flooding into the United States just to catch this rocket ride. Building on that idea of capital flowing into America, if we look at the Forex pairs flashing on our display right now, the U.S. dollar is acting like an absolute global fortress.
It really is.
But our breaking news feed reveals that the dollar's strength is being driven by some very dark geopolitical currents.
Yeah, unfortunately. The safe haven appeal of the dollar is currently in overdrive due to the escalating military conflict. We are seeing fresh U.S. and Iran attacks scrolling on the feed right now.
Yeah, U.S. strikes on Iranian targets, followed by Iranian retaliation against U.S. bases in the Gulf.
Right, and any military escalation in the Middle East immediately threatens global energy supply chains.
Which spikes crude oil prices instantly.
Spot on. And the mechanism there is that a spike in crude oil immediately elevates fears of energy-driven global inflation. I mean, it costs more to manufacture goods, and it costs more to ship them.
And when the world gets scared of inflation, it directly impacts what the Federal Reserve does here in the U.S. Because the market is already bracing for an impending, potentially hot U.S. Consumer Price Index report.
Yeah.
If inflation is ticking up because of oil, the Fed is forced to keep interest rates higher for longer.
Yeah, and high interest rates combined with global fear creates an incredibly strong dollar. It's the ultimate safe haven right now.
But the collateral damage of that fortress dollar is visible all over the board, isn't it?
It's everywhere. Look at the Japanese yen. It's hovering at a painful 160 per dollar.
Ouch.
Yeah, which destroys their purchasing power and puts immense pressure on the Bank of Japan to execute a rate hike by June 16th. And over in China, factory gate inflation just hit a 4-year high.
With factory gate inflation being the wholesale price of goods right as they leave the factory floor, before any retail markups.
Right.
So it's a leading indicator that severe consumer pain is coming down the pipeline globally. And we see the baht, the won, and the Singapore dollar all weakening in the shadow of the U.S. currency.
The U.S. economy is essentially walled off by this strong dollar. And interestingly enough, the State Department is now putting a literal premium price tag on gaining physical entry into that economy.
I saw that. Starting July 1st, 2026, they are piloting a new Visa Fast Track program for B1 and B2 visa applicants.
Right, those are your standard business and tourist visas.
Let's do the math on this program for a second. The standard visa application fee is around $185. The State Department is allowing applicants to pay an extra $750 premium on top of that,
bringing the total to $935.
just to secure an interview within 10 business days. But we need to be absolutely clear about the fine print for anyone listening.
Yeah, this is a huge caveat.
This massive fee only buys a calendar date for an interview. It does not bypass any background checks, it does not speed up the actual administrative processing of the visa, and it certainly does not guarantee approval.
No, not at all.
It is purely a $750 tax to skip the waiting line.
It perfectly illustrates the current global dynamic, though. Access to the United States, whether you are an index fund buying into its tech market or an individual trying to cross its borders, it commands a massive, unprecedented premium right now.
Speaking of premiums, we are seeing a massive shift in how everyday consumers are spending their increasingly stretched dollars.
Oh, absolutely. People are getting hyper-selective.
They really are. And that brings us to a shocking downgrade for a legacy retail giant. RBC Capital Markets just downgraded Nike to a sector perform rating, slashing their price target from $70 all the way down to $50.
To translate Wall Street analysts speak for a second, a sector perform rating is essentially a polite way of saying they expect the stock to merely tread water.
Just pace the broader market rather than beat it.
Yeah, it is a fundamental loss of confidence. It's effectively a hold rating instead of a buy.
But the timing of this is what stands out to me. They got this downgrade exactly one day before the 2026 World Cup starts.
The timing is wild.
That is like a major movie studio's stock tanking the night before their billion-dollar summer blockbuster premieres. Why isn't the biggest sporting event on Earth an event Nike completely dominates with sponsorships, saving them from this downgrade?
Because it reveals the strict limits of global marketing when a company has underlying structural product issues.
Ah, so it's a product problem.
Yeah. Analysts are watching Nike under CEO Elliott Hill, and they are seeing a recovery that is far too slow. Yes, the World Cup will provide a short-term wholesale bump. I mean, they will sell millions of national team jerseys over the next month.
Right.
But a temporary spike in apparel sales does not trigger the sustainable long-term revenue growth needed to rival a resurgent competitor like Adidas.
It seems like the core issue is the loss of the premium market share. When I look around, the people who used to default to premium Nike running shoes or apparel, they're all wearing On Running, Hoka, Elo Yoga, or Lululemon.
The consumer psychology has fundamentally shifted.
Right.
Shoppers are abandoning broad, middle-tier legacy brands in favor of ultra-specialized, premium niche identities. And Nike is bleeding ground in those high-margin, specialized categories.
That makes sense.
RBC is forecasting a sluggish 3% revenue growth for Nike over the next few years. The industry average right now is roughly 6%.
So they are growing at half the speed of the rest of the pack.
Yeah. When a legacy behemoth is growing at half the speed of the overall industry, a flashy global soccer tournament is just not enough to paper over the structural cracks in their business model.
Wow. Now, looking at the right side of our display, we need to dive into the political news feed.
Let's do it.
But before we unpack these sources, I want to deliver a very clear disclaimer to you listening. The NovaStream breaking news feed auto-curates politically charged developments from across the entire political spectrum.
Both sides of the aisle.
Yes. As anchors, our job is to strictly and impartially report the factual events and underlying mechanics contained in the sources you provided. We take absolutely no sides, and we do not endorse any of the political viewpoints, figures, or actions we are about to discuss.
We're simply reading the tape and explaining the context.
Exactly. So, with that impartiality understood, there is a major historical piece that just dropped regarding a White House crisis meeting from July 17, 2025.
Yeah, this was a highly panicked Situation Room gathering. And notably, it was convened without President Trump present.
The sources show the trigger for this meeting actually happened 10 days prior. A joint DOJ and FBI memo had been released publicly, stating that investigators found no client list of powerful men tied to Jeffrey Epstein.
Right.
Now, the stated intention of that memo was to calm the public and end years of speculation. But why did a memo saying there was no lift actually spark a massive backlash, particularly among the Magier base?
It really comes down to the psychological mechanism of institutional distrust. Within that specific base, the belief in elite, systemic corruption is deeply entrenched.
Sure.
So when the federal government, an institution they already heavily distrust, releases a memo essentially saying, There is nothing to see here regarding the elites. It doesn't resolve the conspiracy, it actually validates it.
It creates massive cognitive dissonance.
Yeah, the base felt the truth was actively being hidden by the deep state. Add to that the fact that the Wall Street Journal was preparing to publish an article detailing Trump's past relationship with Epstein, and the administration was facing a perfect storm of base disillusionment and media scrutiny.
Vice President J.D. Vance actually took the lead in this Situation Room meeting, and the notes show he was highly alarmed.
Very alarmed.
He appeared panicked about the MAGA coalition fracturing over the optics of this DOJ memo. He privately pressed for the administration to simply release every single Epstein file in the DOJ's possession, and even encouraged a congressional investigation just to prove the administration's transparency to their voters.
The internal friction this caused was severe.
Really?
Oh, yeah. Chief of Staff Susie Wiles reportedly told others in the administration that Vance was proving to be a major conspiracy theorist regarding the matter.
Wow.
It highlights how profoundly a single issue of institutional trust threatened to destabilize the administration's internal unity.
And as we look at the live state primary results scrolling down our feed, we can actually see how this high distrust, anti-establishment mood is translating into votes right now. Let's look at 3 specific races that tell a broader story. In the South Carolina GOP primary, incumbent Lindsey Graham managed to avoid a runoff.
Yeah, he defeated 5 challengers, including Mark Lynch.
But the financial disparity in that race was immense, wasn't it?
Unbelievable. Graham and his political allies spent $18 million defending his seat since January 2025. Mark Lynch was a businessman who largely self-funded his campaign.
And Lynch ran an aggressive anti-establishment playbook.
He did. He aligned himself with Representative Thomas Massie, hammered Graham for his historical defense of the Iran war, and painted the incumbent as insufficiently committed to the MAGA movement.
But despite the massive anti-establishment sentiment in the electorate right now, Graham survived.
He did.
And the turning point was Donald Trump explicitly calling Lynch a lunatic on social media and throwing his full endorsement behind Graham.
Right. It shows that while voters are angry at the establishment, the explicit blessing of the party's leaders still carries enough weight to save a 4-term incumbent.
Moving to the Democratic side in South Carolina, the 1st District primary is heading to a June 23 runoff between retired Navy Vice Admiral Nancy LaCour and Coast Guard veteran Mac Deferred.
And they are fighting to replace outgoing Representative Nancy Mace.
The overarching narrative here is LaCour's background, though. She served 35 years in the Navy, but was abruptly fired in August by Defense Secretary Pete Hegseth.
Right, and she is heavily leaning into that firing. She's running on a platform of restoring integrity.
It's a fascinating strategy, using a high-profile dismissal by the current administration as a badge of honor to prove your independence.
It is, though whoever wins faces a brutal general election in a coastal district that was aggressively redrawn back in 2021 to heavily favor Republicans.
Finally, looking out west at the Nevada Democratic primary for governor, current Attorney General Aaron Ford won his race against Alexis Hill. He will now face the vulnerable GOP incumbent, Joe Lombardo.
And the state of Nevada is currently suffering through significant economic pain. They are grappling with high gas prices and elevated unemployment.
Which is why Ford's strategy is so notable. He isn't just running on his resume as Attorney General. He is betting everything on his visceral, working-class background.
Yeah, he is constantly reminding voters that he grew up poor, relied on food stamps, and navigated the struggles of being a single dad in his 20s.
And if he wins, he would be Nevada's first black governor.
What ties all 3 of these primary races together is the electorate's demand for authenticity over traditional political resumes.
100%.
Whether it is relying on Trump's ultimate seal of approval, using a highly publicized firing as proof of integrity, or pointing to a history of relying on food stamps candidates, recognize that standard political talking points just no longer resonate with a cynical, economically stressed voter base.
Bringing all these threads together, from the massive numbers flashing on our screens to the underlying human psychology we've unpacked from your sources, I want to leave you with something to really think about today.
Let's hear it.
We just watched SpaceX act as a $75 billion financial black hole. A company so aggressively valued that massive index funds are mathematically forced to sell off other assets just to make room for it.
Right.
And at the exact same time, we're watching everyday consumers actively abandon a legacy middle-tier giant like Nike, punishing their stock right before the World Cup in favor of premium, hyper-specialized niche brands.
It's a huge contrast.
It makes you wonder, are we entering a completely new economic era where Being a traditional too-big-to-fail legacy company is actually a massive liability, where only hyper-agile frontier tech companies on one end of the spectrum or ultra-specialized consumer brands on the other have the necessary gravity to survive this current capital squeeze.
It points to a profound hollowing out of the middle. The companies and politicians who try to appeal to everyone are losing ground to those who dominate a very specific, highly dedicated niche.
Well said. Thank you so much for tuning into NovaStream today and providing the sources that drove this conversation. The crypto markets, the global indices, and the breaking news feeds on your screen never sleep, and they will keep flashing long after we sign off.
The data never stops.
But that is all for our analysis right now. Keep a close eye on those numbers, stay curious, and we will see you for our next broadcast of the highlights of the day. Goodbye for now.